Fundamental analysis. We all know that the biggest part of fundamental analysis involves delving into the financial statements. In this lesson, we will go through the basics of fundamental analysis, the economic analysis, the industry analysis, and the company analysis. After going through this presentation, you should be able to explain the basic fundamental analysis, describe the economic analysis, discuss industry analysis, understand the company analysis, define types of ratio, analyze the competitive advantage. Fundamental analysis is a technique that attempts to determine a security's value by focusing on underlying factors that affect a company's actual business and its future prospects. The term simply refers to the analysis of the economic well-being of a financial entity as opposed to only its price movements. There are two types of fundamental analysis. First is quantitative. Quantitative fundamentals are numeric, measurable characteristics about a business. Second is qualitative. Qualitative fundamentals, these are the less tangible factors surrounding a business. The economic analysis is the overall economic environment in which all firms operate. Growth rate of gross domestic product is a measure of total production of final goods and services in the economy during a period, generally a year. Industrial growth rate, the GDP growth rate, presents the average of the growth rates of the three principal sectors of the economy, such as the services sector, the industrial sector, and the agricultural sector. Agriculture accounts for about a quarter of the Indian economy and has important linkages, direct and indirect, with the industry. The demand for corporate securities has an important bearing on stock price movements. Government plays a major role in most economies, including the Indian economy. The excess of governmental expenditures over governmental revenues represents the deficit, while there are several measures of deficits. The most popular measure is the fiscal deficit. The price level measures the degree to which the nominal rate of growth in GDP is attributable to the factor of inflation. Fiscal policy is concerned with the spending and tax initiatives of the government. Monetary policy is concerned with the manipulation of money supply in the economy. Industry analysis is the process of analyzing various industries. The main objective of this analysis is to assess the prospects of various industrial groupings. Every industry passes through different stages in its lifetime. Pioneering stage is characterized by introduction of a new product and an uptrend in business cycle that encourages new product introductions. Expansion stage is characterized by the hectic activity of firms surviving the pioneering stage. Stagnation stage shows signs of slow progress and also prospects of decay. The stagnation in the economy and the pedestrian nature of the product call for innovative strategies to begin a new life cycle. An industry reaches decay stage when it fails to detect the death signal and implement the proactively or reactively appropriate strategies. Company analysis focuses on understanding the needs of the business as a whole, its strategic direction, and identifying initiatives that will allow a business to meet those strategic goals. The massive amount of numbers in a company's financial statements can be bewildering and intimidating to many investors. Financial statements are the medium by which a company discloses information concerning its financial performance. The purpose of the income statement is to show managers and investors whether or not the company made or lost money during the period being reported. A cash flow statement is a financial report that shows incoming and outgoing money during a particular period. The statement of retained earnings uses information from the income statement and provides information to the balance sheet. Types of ratio are: internal liquidity ratios indicate the ability of the firm to meet future short-term financial obligations. Liquidity ratios are current ratio, quick ratio, cash ratio, and receivables turnover. Operating performance ratios indicate how well the management is operating the business. Some examples are total asset turnover, net fixed asset turnover, and equity turnover. A risk analysis ratio indicates the uncertainty of income flows from the total firm and for the individual sources of capital, debt and stock. Some examples are debt to equity ratio and long-term debt or total capital ratio. Growth analysis ratios indicate how fast a firm should grow. It involves analysis using several other ratios: net profit margin, total asset turnover, and total assets or equity. Business models are easy to understand. Business consideration for investors is a competitive advantage. A company's long-term success is driven largely by its ability to maintain a competitive advantage and keep it. Corporate governance describes the policies in place within an organization, denoting the relationships and responsibilities between management, directors, and stakeholders. These policies are defined and determined in the company charter and its bylaws, along with corporate laws and regulations. Financial and information transparency aspect of governance relates to the quality and timeliness of a company's financial disclosures and operational happenings. Stakeholder rights aspect of corporate governance examines the extent that a company's policies are benefiting stakeholder interest, notably shareholder interest. The board of directors is composed of representatives from the company and representatives from outside the company. The directors attempts to provide an independent assessment of management performance and making sure that the interests of shareholders are represented. Now let us check if we have understood the various concepts discussed in this lesson clearly. The security price prevailing in the market is called intrinsic value. Right or wrong? Wrong. The market value relates to the speed with which the stock market incorporates the information about the economy, industry, and company in the share prices rather instantaneously. Right or wrong? Wrong. The internal analysis can be done periodically to evaluate strength and weakness of the company. Right or wrong? Right. Before we end, let us briefly revise what we have studied so far. Fundamental analysis is a technique that attempts to determine a security's value by focusing on underlying factors that affect a company's actual business and its future prospects. Net asset value (NAV) is a term used to describe the value of an entity's assets less the value of its liabilities. Growth industry is an industry that is expected to grow consistently and its growth may exceed the average growth of the economy. Defensive industry is a grouping that includes firms which move steadily with the economy and less than the average decline of the economy in a cyclical downturn. The term simply refers to the analysis of the economic well-being of a financial entity as opposed to only its price movements. The economic analysis is the overall economic environment in which all firms operate. Followers of fundamental analysis use the quantitative information gleaned from financial statements to make investment decisions.